Okay, guys, we are going to be talking about volume in this class, and this is going to be a full guide on how to use volume, what volume means, and this is basically what we're going to go over today is all you need to know regarding volume. I think a lot of people, they actually misuse volume to their fault, and they end up taking stupid trades and making dumb decisions because of their ideas about volume. Okay, so we're going to talk about exactly how it's used, and let's get right into it. And volume could be actually a very useful tool, and it shows you how much a stock is being bought or sold, right? And how many, and specifically how many shares are being bought and sold. Okay, and that can be quite useful information, right? So volume is it's really one of the primary ways of also predicting price reversals, and using volume will greatly increase the accuracy of picking tops and bottoms with stocks, right? And in terms of picking tops and bottoms, it's really going for those nice reversal plays when a stock is running up, going higher, very quickly, went up quite significantly, and catching that, catching the top and shorting it at the top, right? And it's a very appealing idea. Or for example, if a stock is falling really hard, buying it at the bottom, and volume can be a useful tool in figuring when to buy, when the bottom is or the top is. Okay, and volume could also indicate when a move, which is either a rally or a drop, is beginning, ending, or continuing. Okay, so that's actually quite important. Whether and we can use volume to actually judge exactly what's going on. And I'm going to show you examples, so I don't want to get too ahead of myself. I'm going to show you examples of exactly what I mean. But what I want to talk about first is different types of volume. Okay, and there is number one, amateur buy volume, or you can call it amateur, you can call it novice volume. Okay, and basically, as we're looking at it, right, we could see 4 or actually 5 green bars in a row going into resistance. So I've kind of tried to paint out a diagram here, right? And whenever you see that, we already have 4 green bars up, that 4 bigger green bars heading right into resistance. And on the last green bar, we kind of have the longest, the widest range bar. The widest range bar, and that's when we get the huge increase in volume. And what does this volume mean? This volume, to me, suggests that a reversal in price might take place. And you can think of it as the last group of buyers, right? The last group, have bought the stock, and the stock is running out of demand, right? So obviously we had a lot of buyers who brought the price of the stock up here. You could think of these guys are the ones who, maybe haven't kind of missed out on the move, or they haven't capitalized on it, and they're like, oh my God, it keeps going higher and higher. I'm going to buy in, because it keeps going up. And a lot of people have the fear of missing out, right? They don't want to miss out on the move, so they get in at the end. That's why it's called amateur buy volume, because they're getting in at the end of the move, right? We're already up 4 green bars, but these last group of buyers who are experiencing, the fear of missing out, FOMO, for example, or other emotions, they're just getting in now, right? So this is the last group of buyers that are finally buying the stock, right? And it does not matter, by the way. And this is actually a really good example of how you would short this. You would kind of look for a doji bar of this nature, like this, and you would play entry under the doji bar, stop loss over it. And we're going to talk about that in the actual reversal class, okay? And it doesn't matter if it's a red or green bar, but these are just 2 examples where a huge volume spike, right? And this is, especially with the doji bar, it's very interesting, because remember, guys, the doji bar represents not indifference, it represents uncertainty, right? The buyers and the sellers are even, right? And when there's a huge volume, that means the buyers or sellers are like really battling it out. And if it ends up dropping below the doji bar, that means the sellers have emerged victorious, and it'll actually, it's most likely going to drop. Okay. And it's very effective when it's heading into resistance, right? If you are getting a huge move, rally into resistance, and then you have an opportunity to short it with large volume, then you're going to look to actually short that play, right? And you could think of it as novice or beginner traders finally buying their position. The people that don't know what they're doing, they don't buy at the beginning of the move, they're buying at the end of the move, right? And that's why they're beginners, because as soon as they get into it, it actually drops. There's also amateur sell volume, which is the exact same idea. The spike in volume at the end of the move suggests a reversal in price. Think of it as the last group of sellers have finally sold the stock and the stock is running out of supply, right? The stock keeps dropping and dropping and dropping, and some people are like, oh, it's going to keep dropping against me and against me. I'm going to get out of my position. So these are the last group of sellers that are finally exiting after the stock dropped, 4 or 5 red bars on them. And the stock is running out of supply, okay? So it's effective when the rallying spike, if it directly hits, this should be support level, right? So if it's dropping into support with large volume, with a doji bar, then we can look to play it long. And think of it as novice or beginner traders finally selling their position after it dropped significantly already. Okay, so this is basically, just to sum it up here, these are beginner amateur traders who are either buying in at the end of the move or selling when the stock is already down, panic selling, you can think of it. There's also something called igniting volume, and you can also call it professional volume, right? And in this case, the volume is actually igniting a brand new move, like whether that's a rally or a drop, and it's igniting a brand new direction for the stock. The professionals, they don't enter, the professional traders, the people who actually make money doing this, they don't enter the stock at the end of the move. They're entering at the beginning of the move, so they can actually, have a huge move go in their direction and make tons of profit, right? So it's also very potent reversal signal, right? So it's kind of igniting volume and amateur volume. They can sometimes happen at the same time, so you have to kind of they can be quite similar. It depends on the circumstance, right? So we have a huge drop, right? And you can think of it, this can be interpreted, we as soon as the drop occurs, then we have a major, green bar higher. This is igniting volume. This is igniting the move higher. I think this is a better example right here, where we have a rally, and then what is this? This is a base breakout. This is a consolidation that you play. We play over the highs, right? We play long over the base, and boom, igniting volume. This is a huge green bar. It ignites the move higher, okay? And there's also continuation volume, which it's basically when there is very low volume after a rally or after a move, right? So it kind of continues the prior move. While a stock is basing, volume should begin to drop when it's a good base. And it indicates there's not too much selling pressure. So when the stock does have a breakout and volume spike, it's more likely to succeed. So basically the idea is we have a rally, right? And a rally on kind of high volume. But as soon as we get a base, we want to see a very small volume, right? Very small volume. So when we get the igniting volume or the igniting bar with igniting volume, it's more likely to actually work. So during bases, we want to have low volume, okay? So a small volume base. The bases that have a lot of consistently high volume, and what I mean consistently high, it's relative to the stock, right? Relative to the normal amount of volume that it's doing. So if it has small volume, that's what you're going to want to look for in a base, okay? And so another kind of point that I want to touch up on, and this doesn't really have anything to do with, it kind of has something to do with volume, but it's more, I just want to make this a separate little topic, and it's called the shakeout bar, okay? And the shakeout bar is an incredibly useful tool, not even tool, it's an incredibly useful candlestick that when you see it, it can greatly enhance the quality of a trading, setup, of a pattern. And it happens when a stock attempts to break down from a bullish base on large volume and fails to actually break down, right? Because remember, a bottoming tail suggests that the buyers took control, right? We had a drop, but then the buyers took control, okay? So, during this base, it's consolidating, and then the stock attempted to break down. It attempted to go lower, but the buyers came in, they took control, and they brought the stock right back up. That's basically what happened. And it shows that, yeah, the sellers came in, but the buyers were like, no, like this stock isn't dropping. We're going to bring it back up. This stock is going higher. You can kind of think of it like that. And why is it called a shakeout bar? Well, remember guys, during a consolidation, a lot of people, they put their stop losses below the base. So when there's a huge drop, it's going to trigger a lot of people's stop losses who are in it long already, who are already in the position, who bought it earlier or maybe bought it during the base. They put their stop losses under the base. So if the stock drops and hits everyone's stop losses, it's going to create kind of like, a bunch of stop loss, a selling stop loss orders are going to trigger. And the stock is going to drop. But if it's able to recover, that suggests a lot of bullishness. That's a very bullish thing. I really hope that makes sense, right? So I'm just going to read this. Most people who are in long positions expecting the stock to rally higher, they put their stop losses below the base. When the stock attempts to break down, those stop losses are hit, propelling the stock lower, right? If the stock is still able to get bought and return to the highs, then there's clear confirmation the stock is indeed bullish. Okay, hope that makes sense. Especially if there's good volume on the shakeout. That's another thing that we want to see. So if you ever see a base higher, you want to see a bottoming tail, like a shakeout bar. Or if it's a base lower, you're going to want to see a topping tail or a shakeout, a failed breakout before it continues lower for a short. And I'm just going to show you guys some examples. By the way, we have the 200 MA drop into the 200, get some pretty good volume, reversal, right? Right here, pretty good volume, reversal. Right here, we got a bunch of volume, but I think what most notably is this huge drop into the 200 MA, followed by right here, this is amateur volume. This is the last group of sellers finally selling, and this is professional volume, right? Igniting volume that ignites the move higher. These are when the professionals are getting in. Okay, hope that makes sense. Same thing here. Right here, we have a really nice reversal, huge increase in volume, and spike in volume. And notice how sharp the increases in volume during major sell-offs or rally lead to sharp reversals as well. So yeah, when we have a sharp drop with huge volume, it also leads to a sharp reversal most of the time. Again, here we have amateur volume and then igniting volume pushing the stock higher. Same thing here. Huge igniting volume ignites the move lower. It double bottoms. Again, huge volume propels the move higher. And I'm not suggesting that whenever there's huge volume, you should buy or base, your decisions that only strictly have volume. Volume, it's useful because it could be like an enhancement on the trade. Let's say there's a lot of other really great qualities about the trade, plus there's really great, you have good volume indication, then it's going to enhance the quality of the setup. Again, here, we saw this during the breakout. We have a breakout type base, right? Igniting volume that ignites the move higher. That's what we want to see. And notice the extremely low volume during the base. This is a continuation of the prior move, which was, a strong move higher. Same thing here. Breakout volume, igniting volume. Same thing here, igniting volume, right? And during the base, continuation volume, very, very low volume. Okay, that's what we want to see, right? Same thing here. We have a gap up above the 200 MA. We talked about it before. Professional volume, it's sparking a new rally higher. Same thing here. This gapped right under 200, huge drop, professional igniting volume. That's it, guys, for volume, okay? So I would really recommend rewatching this as well and really understanding that what makes volume so interesting is the fact that it can kind of tell you when a move is being ignited. It can kind of tell you when a potential reversal is coming, okay? And continuation volume during a base could also give you clues whether that's actually a high quality base, okay? Thanks, guys.